All right, let's see if maybe third time can be the charm. So I already tried making this video yesterday. The first time I went live by accident, and then the second time I made a 40-minute video and didn't click record. So I wasn't about to do that again. You know, I was kind of frustrated after that. So I'm getting this video out a little bit late, but I'm going to get it out before Monday. And we're going to be talking about a lot of different charts in this video. It's going to be pretty similar to the last video that I put out, really just stressing the point of market synchronization and the macro positioning of the major indices. So like NASDAQ, Dow Jones, S&P 500, IWM, all the way to the crypto market with Bitcoin and then altcoins, and then right down to the meme stocks, AMC and GME, and what we're going to be looking for going forward. So because I've been going live and because my live streams are available to all of my subscribers, not just the members of my channel, this one time I'm going to make this video for the entirety of my channel. So it's going to be available to anyone who subscribes to me, even if they aren't a member, just this one time, because, you know, we're all in this together anyway. We all want the same thing. And, you know, I'm just feeling a little bit generous. So that's what I'm going to do for this video. I'm just going to make it available to everyone. Probably instantly will regret that, but I'm going to do it anyway. So with all of that being said, let's jump into the video, and we're going to kick it off with indices first, macro position of indices, and then from there, macro position in the crypto market, and then macro position of AMC and GameStop. So first of all, we're looking at IWM on the left here, S&P 500 on the right, and both of them were starting from the knife in 2020. The COVID, if you want to call it a market crash, wasn't really much of a crash. It's more a macro spring than anything, but this is the beginning. COVID, the bull run in 2021 up to all-time highs, and then both S&P 500 and IWM and Dow Jones and NASDAQ all around January 2022 started pulling back. And we see that with IWM. We see that with S&P 500. Now, since the beginning of my channel, I've been saying that the entire market is going to new all-time highs, and that's what we're witnessing. So as well as the major indices, most of the underlying is at all-time highs or very close to it, with the exception of small caps and meme stocks. And the reason being is because of IWM. But with all of that being said, you guys have watched me track the symmetry on SPY for roughly a year straight, and breaking out of the symmetry on the other side of it and going up to all-time highs and further, and it's just been climbing ever since. So we have a very similar situation now with IWM, where we're looking for IWM to break out of the symmetrical equivalent on the right side of its move now and go to new all-time highs and further. And with that, I've been saying for the past year or so that the macro breakout on IWM will be simultaneous with the meme stocks, and that's what we're looking for anyway going forward. So we already know where IWM is heading. We already know that IWM is heading to all-time highs because it's playing out a perfectly symmetrical bottoming formation the exact same way we saw with S&P 500, only it's a little bit behind, where SPY already broke out of the symmetrical equivalent at 409 and all the way to all-time highs, 565, and still climbing. IWM has recently broken out of the right shoulder of the move. If you envision a vertical plane right down the middle here, and you could see the landmarks on either side down to the spring. This is also a perfect Wyckoff accumulation pattern, now heading into the markup phase. We have the left shoulder here and then the right shoulder. Exact same levels, upside and downside on that. And then we have the breakout to the recent local high. It's also a 2-year high on IWM of roughly 228, which if you run this horizontal line across, you could see breaking out of the left shoulder. That is where you reject, right off 228, and then you pull back to this blue line here, the equivalent being IWM's most recent pullback, which did pull back a little bit through it, which isn't really that big of a deal, because when you go back to S&P 500, this pullback on the right shoulder here actually poked through this dotted pink line a little bit. The initial call out was 410, I believe, and the actual bottom was like 409 and change. So the right shoulder did poke through a little bit lower than what we were looking for, but it was essentially the same level. And that's what we're going to be looking for on IWM now, is to bottom out here and then reverse back to the upside and then break 230 for good. And then this right here is all-time high IWM. So you could see how close we are to seeing IWM, see its macro breakout. It's a pullback, which we've already done. We need this to bottom out, curl back to the upside, and then break 230, and then this is all-time high. So the symmetry is almost done on IWM now, and just like SPY, we already finished up the symmetry. We're already at new highs. That's exactly what we're looking for going forward on IWM. And I'm going to make it a point in this video to stress market synchronization because that ties into everything. It's all interconnected. There's a lot of people in the community that I've seen over the past year and a half or so talking about the market's going to crash and that's going to be the catalyst for AMC and GameStop, which is wrong. It's just not correct. The market's not going to crash yet. The market's going to continue climbing. And while it's climbing, we're going to see AMC and GameStop squeeze. After AMC and GameStop squeeze, the market will be essentially at the top, and then we'll be looking for the market crash for everything, not just the major indices in the market, but everything in the market. So this is IWM just showing as far as the symmetrics of the move would go, it's pretty much done. It's at the end, at the final pullback before the reversal to all-time highs on IWM. SPY already did it. And moving forward from that, we have the macro perspective on IWM, where this is your macro V or all-time low landmark, the COVID knife of 2020, the V out of it, and then you have this uptrend here, these three peaks. So every peak is higher than the last, 1, 2, and 3 higher peaks. We have this uptrend here, and then this gap up right here is the macro breakout for IWM. That's where it essentially goes vertical. This right here is the window, January 27th to June 2nd, 2021. This is when AMC and GameStop actually squeezed the first time. We have the exact same setup now. So macro V here, all-time low landmark. It's also the spring of the accumulation, lowest point in range right here. The V out of it, and then the uptrend, these three peaks, 1, 2, and 3. Now, I did adjust this slightly. Now, I had the third peak here originally, which I mentioned several times, actually. That was a little odd. It was a little strange because this should have been a higher point. It looks like we just hit the third peak here, and we just broke below trend again, so we're just going to be looking for the reversal, and then the macro breakout for IWM to all-time highs and further, which, again, will be simultaneous with memes, so it's right there at the breaking point. If you pinpoint this down to a date, and this is going to apply to everything else in the market, literally everything in the market, this is November 2020 for IWM. So December 2020, January 2021. The point of what I'm saying here is that the entire market is heading into that 2021 moment we saw 3 years ago where everything just melted up. That's where the market's heading right now. The final stage of the melt up in the market before the market crashes. Before the market can crash, IWM has to finish up the symmetry, has to go to all-time highs. We've already seen that with SPY, Dow, NASDAQ. IWM will go to all-time highs. The meme stocks will squeeze again. Bitcoin, I'll get into Bitcoin, but we're not at the top yet in the market, is what I'm saying. So macro position, we're coming off this third peak here, breaking below trend the final time before the reclaim, and then the breakout to all-time highs and further, which is also justified here on the symmetry chart, where we're at the final landmark of the symmetry now, retesting the range, the breakout. So the left shoulder, breakout, retest the top of the range, right shoulder, breakout, retest the top of the range. After this test confirms, break 230 to all-time highs and past that. That'll be macro breakout for IWM, and that takes us into this. We're going to be looking for a vertical line on IWM, and we're also going to be looking for AMC and GameStop to squeeze again. Last time we saw that was right here. So right after you see the break on IWM and it goes vertical, 2 months later, AMC and GameStop squeezed. It doesn't mean we have 2 months until we squeeze. What it does mean is that the entire market is at that breaking point, heading into that January 2021 moment again. And this is more evident as we move through the video. We could look at something like IWM, which I just covered the macro perspective of. We're in November 2020, heading into that January 2021 moment. But also, if you look at S&P 500, and I'm not going to be showing the full extent of this channel, but this is a 15-year macro channel on S&P 500, which has been respected very well. And we're in the process of trying to break above the midpoint of the channel right now. The last time we saw that was right here, breaking above the midpoint of the channel. And guess when that was? November 2020. So November 2020, SPY continues climbing, December, and then into January 2021, right here, that's when AMC and GameStop squeezed, and then IWM is in that exact same position. Also, the crypto market is. So if you look at this perspective of Bitcoin's macro, we'll call the bullish cycle a squeeze for the sake of simplicity. And then you just draw a horizontal line across the top of it. You pull back to all-time low landmark. You fill out the cup on the other side up to all-time high, the previous all-time high level, rejecting, trying to break through. You finally break through it, and then squeeze again, essentially. Draw a horizontal line across down to its all-time low landmark, fills out the cup on the other side, up to the previous all-time high level, rejecting, breaks through into a squeeze. And then the 2021 highs, drawing a horizontal line across, down to all-time low landmark. Cup fills out the other side, and we're battling to break through the previous highs of 2021. If you look at the macro position of this, the last time we were in this position for Bitcoin, early December 2020. So we just covered SPY and IWM or November 2020. The next month is December 2020. That's where Bitcoin is, and then into January 2021. The point of what I'm showing here is that the entire market, everything, major indices, all of the underlying crypto market and memes are at that late November, early December 2021 moment, right before the market melted up in January 2021. We saw altcoins squeezing, so I'm going to get into that actually with Dogecoin. But we saw the blue chips climbing, we saw the indices climbing, we saw Bitcoin climbing, we saw the altcoin squeezing, and we saw the meme stock squeezing. And that's the exact moment we're heading into again. Now, like I said, Bitcoin is at this level trying to break the previous highs of 2021, which is December 2020, the last time we were in this macro position for Bitcoin. If you zoom in on the micro on this horizontal line up top is 69,000, which is the all-time high of 2021. Now, Bitcoin did already form new all-time highs, but poked above it. We didn't break through it completely yet, but we did form all-time highs, poking above. And currently, we're just playing out this descending channel pattern, which is bullish. We're going to be looking for a breakout to the upside of this since the beginning of March. So March, April, May, June, July, we're now in August. That entire time, Bitcoin has been playing out a descending channel or a flag, whatever you want to call it, but we're breaking to the upside here. Once we do break to the upside, break out of this channel, that implies we break through 69K, and that implies that Bitcoin goes to new all-time highs. The bullish cycle for Bitcoin is going to 100K at least, if not as high as 200K. That's where Bitcoin's heading. And then if you look at something like Dogecoin, so this not really underlying Bitcoin, but kind of the same kind of thing. If you're looking at SPY and then some of the underlying like blue chips and their macro positioning, and now we just looked at Bitcoin, we could look at an underlying of Bitcoin would be Dogecoin and Dogecoin's macro positioning. Another very repetitive macro, you could see just stair-stepping its way up here. And macro position coming off its all-time low, you get this little pop here, and then the pullback, that is late November, early December 2020, heading right into that January 2021 moment. So going forward, we're going to be looking for Bitcoin to break out new all-time highs, 100K plus, wherever it's going to end up topping out, maybe as high as 200K. While that's happening, we're going to see a squeeze again on Dogecoin. We're going to see a vertical line squeeze again as Dogecoin resets into its macro cycle, its macro bullish cycle here. That's where it's heading. The entire market, everything is at that moment of macro break, leading right into that January 2021 moment. So yes, the market's going to crash, but no, it's not going to crash yet. I'm going to make that more apparent as I move through the video, but the top is not in yet for the market. So that's Dogecoin. I talk a lot of shit about mainstream media, and I'll continue to do so because they do not have your best interest. All they do is lie. I don't know if it's intentional lying or they just don't understand the market. Whichever way, it's not the best idea to ever listen to them. 2.9 trillion was wiped out from stocks today due to fears of a global recession. Okay, Bill Gross says don't buy the dip as stocks crash while Warren Buffett's moves hint at sell signal. A couple of just mainstream media headlines here, but I feel like this chart speaks pretty well for itself. Making my channel 2023 at the bottom of the market, and ever since then we've just been uptrending. And this is just some of the wild shit that I've heard on the way up. But Warren Buffett's talking to his moves or hinting at a sell signal. I'm not listening to Warren Buffett. Remember when Michael Burry went short, $1 billion short on SPX at $430? Remember that? Because I do. And since then, it's just been climbing, 565 all-time high. I don't know if it's lies. I don't know if it's not lies, or it's just blatant. They're just blatantly trying to be deceitful, but they're wrong. And I don't know how many times I could say it. They've just kept being wrong this entire time. BlackRock called this a fake out at, I don't know, $410, calling that a fake. We're at 565 all-time highs. Yes, we're pulling back right now, like short term. We're pulling back right now, but the market is not topped out yet, is the point of what I'm saying. And now we can transition into the meme stocks. So what we're looking at here is GameStop. We're looking at a side-by-side of 2020 leading into 2021 January. And on the right, we're looking at 2023 August leading into 2024 August now. The flat portion, obviously it's not flat. I'm just calling it flat portion for the sake of just giving it a label. Look at the tracking here. And this is a year plus of tracking on either side. GME down to this initial bottom, this yellow dot bounces off. Over here, down to this initial bottom, bounces off, breaks through, finds another bottom there, up to the 200 EMA in white, up to the 200 EMA in white. This little megaphone pattern that plays out that you see here. This was earnings for GME. I actually announced that I was bearish on this earnings because I was looking for a knife down here to come to the all-time low landmark, which we did. And then the break above the 200 EMA that you see here is what we've done. And this top almost at all-time highs for GME. I mean, that in itself, that's very bullish. It's like this hit very close to all-time highs. We pulled back for the retracement and the consolidation, and we're looking for another upside break here on GME into a squeeze. We're just trying to break the top of the range, the equivalent for GME being $30. This pullback here down to the 200 EMA, I would expect the 200 EMA for GME to hold as support, and in saying that, this next reversal for GME is going to be breaking it above $30, more than likely in vertical fashion into a squeeze. So, kind of going back to the major indices of the market like SPY or IWM or even Bitcoin, the macro position of all of this is late November, early December 2020, heading into that 2021 moment. If you look at GameStop, guess where GameStop broke above the 200 EMA previously? Late November, early December 2020, heading right into January 2021 squeezes. That's where we're heading. Look at this is a year plus on either side here of tracking. Perfect movement, perfect rejections off the 200 EMA. We broke above the 200 EMA on the daily for GME. We're testing it right now. That's extremely bullish. Late November, early December 2020 is when we last did that. And then January 2021, we squeezed. That's what we're heading into. For AMC, it's a very similar story. AMC 2020, January 2020, the flat portion begins. January 2021, we squeezed. And this is 342 days, roughly a year. You can see we're breaking down from this level here, 42.28. And on the right side, we're looking at the current iteration of this now, again, breaking down from 42.28. And the movement here, bottom one, bigger tri-peak or M shape that we saw here, bottom two, smaller tri-peak, all-time low, smaller tri-peak, all-time low, and then the jet test off. And we're sitting right here right now for AMC, heading into that January 2021 moment. Look at the 200 EMA. It's a little bit more smooth in the current cycle, but look, 42.28 on either side breaking down, plays out the flat portion, roughly a year in length, 378 days here versus 342, almost 1-to-1. EMAs, granted, the current 200 EMA is a little bit more smooth, but look at the EMAs, look at the level you're breaking down from. Look at GameStop side by side, the previous flat portion and current and the EMA. We're heading into that moment. That's going all the way back to everything else. IWM is about to see its macro breakout. I've been saying for a year that's going to be simultaneous with memes. It's right there symmetrically. The last thing to do here is reverse back to the upside, break 230 and go to all-time highs. SPY being at the midpoint now. The last time we saw that was November 2020, right before January 2021. Bitcoin at its previous all-time high level of 2021. Last time we saw that, Bitcoin in this macro position was December 2020, heading into January 2021. The entire market is at that moment. It's not just AMC and GameStop; it's the entirety of the market. This is another perspective, and this is going to take me into my next point, where when I made my channel and I was tracking the flat portion up here, which played out almost perfectly. So bottom one, the larger tri-peak, bottom two, the smaller tri-peak, all-time low landmark, and then we got the vertical line break up to the 200 EMA, where we found a rejection, and then from there we pulled down to the 50 and 100 EMA, green and red, for consolidation before we actually found our breakout here. Granted, we broke to the downside. What happened when we broke to the downside is we played out a whole nother flat portion. So bottom one, M shape or larger tri-peak, bottom two, smaller tri-peak, all-time low, vertical line break up to the 200 EMA, pulled down to the 50 and 100 EMA for consolidation, and we're at that breaking point again. Only now we're looking for a break to the upside and not the downside again. And if we do break to the upside, we break over the 200 EMA, that takes us into our squeeze going back to this. That's what we're looking for, break the 200 to the upside and a vertical line into our squeeze. Important note with this is the tracking is going to be the same. That's what AMC's macro does. It just keeps repeating this iteration, this flat portion iteration. Again, it's not flat. I'm calling it flat for the sake of just naming it. But this iteration just keeps playing out. It's on a loop. It just keeps playing out over and over and over again. Every time we break to the downside, the one time that we don't break to the downside, which is what we're heading into now, we're looking for the upside break, that is the squeeze for AMC. Now, if you look back to August 2023, when we actually broke to the downside here, the last time that we saw this, that's August 2023 for Bitcoin is right here. If you look at S&P 500, August 2023 is right here. If you look at IWM, August 2023 is right here. So look at the macro position of the rest of the market when AMC was seeing this downside break. Bitcoin was right here, not even close to 2021 highs yet. SPY was right here, not even close to the midpoint yet, as it is now. And IWM was right here, still pulling back to its all-time low landmark, not even close to breaking this level of resistance and heading to all-time highs. As I mentioned, symmetrically, IWM, the only thing left to do is reverse here and go to new all-time highs. If you look back at the break on AMC to the downside, the reason we broke to the downside is because the market wasn't in the right position yet. We weren't almost at all-time highs for IWM, the symmetrical equivalent of all-time highs at least. At this point, SPY was not at all-time highs yet. Bitcoin was not at all-time highs yet. The market was not ready at this point to melt up. The market now, a year later, August 2024, is in that position to melt up. Everything. IWM, Bitcoin is right at the previous highs of 2021. SPY is already above all-time highs. It's up trying to break over the midpoint now. The last time we saw that was heading right into January 2021. And IWM is at the exact same moment trying to get this macro breakout, break over this third top here, which will take IWM into a vertical line. The last time we saw that heading into 2021. And symmetrically, it's done. Just like I tracked SPY, the symmetry of the bottoming formation on SPY for a year, IWM is the exact same story. It's just a little bit behind, but symmetrically is about to break out. So what I'm saying is in August 2023, AMC was not ready to break to the upside, and because of that, we broke to the downside, and we played out a whole nother flat portion, and we have the exact same setup now that we had August 2023. We're now in August 2024. We have the exact same setup, vertical line up to the 200 EMA, pullback, consolidation at the 50 and 100 EMA, just like we saw here before it broke to the downside. We're now looking for that macro break, but to the upside. And like I said, the reason we didn't break to the upside in 2023 was because we were not ready. AMC was not ready, GameStop was not ready, and the rest of the market was not ready to melt up at that point yet. The market now is ready to melt up. Now it's ready to melt up. Bitcoin is at all-time highs. The next break to the upside here is taking Bitcoin 100K plus. The next break to the upside for SPY breaks above the midpoint, back to the top of the channel. Roughly 650 is my long-term price target for SPY. And the next break to the upside for IWM is breaking this final layer of resistance here to all-time highs. So the market is now ready to melt up. It wasn't a year ago, August 2023, is the point. And because of that, we're going to be seeing GME break to the upside into a squeeze and AMC break to the upside in a squeeze. Now, temporarily, the market is bearish, and which is fine, because if you look at the synchronization of SPY and IWM, where the initial 2023 flat portion, right? So we're looking at November 30th, 2022, November 30th, 2022. So this is SPY over here on the right. This is AMC over here on the left. November 2022, SPY is uptrending here. AMC is playing out the flat portion at this time. We get the vertical line break in July. We pull back for the consolidation into August. So right around the time we saw this vertical line break, July 27th, 2023, July 27th, 2023 for SPY was hitting its top. At this moment, SPY started pulling back temporarily, short-term bearish here for SPY. Hits the top. As you see this vertical line break for AMC, pulls back, descending broadening wedge, nothing new. This was the 409 landmark. And then SPY just started climbing all the way from there to where we are now, local all-time high, 565. We now have the exact same setup where we just got the next vertical line break for AMC. We're in the consolidation now. And SPY, once again, is hitting a local top, just like we saw in August 2023, right here. And then the pullback, again, SPY is hitting a local top. You know, I had mentioned that it's not the worst thing that we're seeing the market kind of tanking right now, because all that's implying to me is that we're just seeing liquidity being pulled for the upcoming break on AMC, and we're going to be looking for that to break to the upside. This is another perspective of looking at AMC from IPO. We have this macro support trend running straight down from IPO, so you can see the first bounce being the initial flat portion here, and the next bounce, a perfect bounce off this trend, was the most current all-time low for AMC. So you have the bullish cycle here, January equivalent into the June. So January equivalent into the June. Then you start downtrending, bearish cycle of AMC. And this eclipse here, kind of just hovering, but it is downtrending, up until January of 2020. And then same thing here, just kind of hovering downtrend until August 2023, where you get that knife, the equivalent, that very steep knife, January 2020, August 2023, very steep knife. 1 year goes by, playing out the flat portion, and then January 2021, we squeezed. August 2023, we knifed down. A year has gone by, and we're now in August 2024, looking for the squeeze. So another cool perspective of looking at AMC's macro like that. And now we can get into the actual tracking itself, where on the left, we're looking at January 2021 AMC. So this is January 27th, the initial squeeze on AMC, and then the retracement and consolidation, versus the most recent move that we saw at the 13, and then the retracement and now consolidation. So that's your highest high in range, obviously, coming off your all-time low landmark for each. That's your local high there. Pull back to V number 1. That is the lowest low in range. You have your second highest high in range that you see here. V number 2, pull back again. V number 2, pull back again. Another lower high here. Another lower high here. V number 3 actually breaks below trend slightly, does in 2021 as well. And then you get the reclaim and retest. So reclaim and retest. And now what we're looking for is a breakout of AMC to the upside and above $13 up to the next range. This next break that we see on AMC, if to the upside, and most likely it will be, is going to be the squeeze. If you look at the date range on this, because I did scale the move a little bit, this initial top here to the third V was 99 days in January of 2021. The initial top here to the third V in the current iteration was 71 days. So a little bit faster, we're playing this out in the current cycle. And then if you go from third V to the peak, so we're going third V here to January 2nd, 2021, all-time high AMC. If we pull the exact same date range here, that implies that we're going to be breaking out and more than likely seeing the peak before August 22nd, because we're playing this out faster. So this looks really good. This iteration plays out all over AMC's macro. Here's another example. There's only one of two ways this can go. So I've been saying this for months. The members of my channel, the people that watch the videos that I make every day, I've been saying this for months now. We're going to be in this range for a while. We're going to be consolidating in this range for a while. And when we break out, there's only one of two ways this can go. Number one, we break to the upside, like we saw in January of 2021. Number two, we break to the downside, like we saw in August 2023. Exact same setup, all-time low, chop zone, vertical line break, pulls back for the retracement, and then the consolidation in an uptrend. When you get to that breaking point, there's only one of two ways this can play out. We either knife a vertical line past all-time lows, which I don't think is going to happen, or we vertical line up past the high of the range, which would be a vertical line past $13. That's what I do think is going to happen, and that goes right back to this chart. In August of 2023, the entire market was not positioned where it needed to be. August 2023, Bitcoin was not at all-time high levels. August 2023, SPY was not at all-time high levels. August 2023, IWM was not at all-time high levels, but they all are now. The entire market is interconnected. It's all tied together. It's all synchronized. It's moving in tandem. What I'm saying is right now, the current situation in the market is a carbon copy from Dow Jones, from NASDAQ to S&P 500 to IWM to the crypto market to the meme stocks. The current situation in the market right this second is a carbon copy of what we saw heading into 2021. That's what I'm saying. So we're going to be looking for a break. As far as landmarks go, micro tracking, we checked off everything. We're at this third bottom here. We reclaimed trend. If you look at, August 2023, we're at this third bottom. We're reclaiming trend. The only thing to do now is get the breakout. And like I said, the only two ways this can break is either a vertical line straight down past all-time lows, which I don't think is going to happen, or a vertical line up past $13. In doing that, that takes us into our squeeze that breaks above the 200 EMA. To this slide now, something that we have not seen since January of 2021, breaking above the 200 EMA, is the 200s in white. The last time we broke above the 200 EMA was January of 2021. So we saw the January and June squeeze. We had the pennant. Pennant broke below the 200 EMA, and ever since then, we've just been rejecting it as resistance. The 200 EMA is our macro resistance. Over and over, we've rejected that. Not only that, but the 50 and 100 EMA, the green and red, we're looking for a cross there as well. We have not seen that run this all the way back. The last time we saw that cross was heading into January of 2021. So we have the exact same setup. This also really nicely displays the setup that we have now compared to August 2023. So you can see the vertical line break up to the 200 EMA, vertical line break up to the 200 EMA. You get the pullback to the 50 and 100 EMA. Right here, you consolidate on it, and then you get the breakout. Obviously, we broke to the downside there. Now we're looking for the break to the upside. The reason we broke to the downside here was because the entire market was not positioned correctly as it is now. It wasn't ready to melt up the way it is now. So we're going to be looking for this to break to the upside. If it does break to the upside, when it breaks to the upside, the 50 EMA will cross the 100 EMA for the first time since 2021, and the price action will get above the 200 EMA for the first time since 2021. 200 EMA is our macro resistance, and every time we've touched it, we've halted. So this was a halt at $13. This was a halt here. This was a halt here. This was a halt. This was a halt. This was a halt. You get the point. Every time we've come up to the 200 EMA, we've halted, and it's not malicious. It's just to make sure that AMC's macro plays out properly. If you go back to January of 2021, this peak here, we halted. They removed the buy button removal. Theoretically, that had to happen because we had to pull back, we had to consolidate to get to the next breaking point where we broke to the upside again. So we saw a buy button removal here. We saw a halt here. Go to the current iteration. Move to 13. We halted. What happened? We pulled back, and we're playing out the consolidation the exact same way that we saw in January 2021. These halts are not malicious. It's just to make sure that the price action plays out properly. When we actually break into the bullish cycle of AMC, we're probably going to see halts. We'll probably even see a buy button removal again, but we're not going to see the halt until we get to the fib. All these halts are at the fib level. So this halt in January was at the 3.618 fib. And the next halt that we see is going to be at the 3.618 fib. That's just the way that's the way that the market works. The market is all fibs, it's all fractal. It plays out it's repeating, just loops, keeps repeating, and the rejections and the halts that we're seeing are at fib levels. It's just the way it's going to happen. The good thing for AMC moving forward is that the macro fib level is $1,400. So that is my long-term price target for AMC. That's where I think we're going. GME is what GME is going into 4 figures. So that's where the meme stocks are heading. This is another perspective of looking at AMC. So the break to $13, and I just have some curves here just to kind of show you, aside from the tracking being ready to break, aside from the market being positioned in a way where it's about to melt up, if you look at the current iteration of AMC, the past couple months of price action, you could see we're pinching down here, lower highs and higher lows. We're pinching into that moment of breakout. You can see we have a support, we have a resistance, and I have these curves here just to kind of show you we're forming lower highs, but we're forming higher lows, pinching into that breakout. And that goes right back to the tracking. As far as, landmarks would go on a micro level, we're ready to break out. And like I said, that breakout can only play out one of 2 ways. It's either a straight line up or it's going to be a straight line down. And we're not looking for the straight line down. So that implies we're looking for a straight line break out of this range to the upside. And if somehow we make it to Friday this week without breaking out, we're going to be sitting at the end of this. If we don't break out this week, this is going to be the most boring, low volume, small range week of AMC we've ever seen. I'm betting right now we're breaking out this week as of right now. Does that mean we absolutely have to break out this week? No. Like I said, we could pinch down all the way here. I just think that's really unlikely. Another cool thing here, if you look at the previous earnings on AMC, and I could probably make that more apparent on this perspective. So first of all, this is the top of the move here. Pull back to V1, that's your lowest low in range. Second highest high here in red. And then you break below the channel here. We had earnings, the last earnings, right here, right before we came down to V2. So it's Wednesday, no volatility on the previous earnings. So Wednesday here, Thursday and Friday, we kept downtrending. And the next week, Monday, just gapped up and went vertical on no news. So we have the exact same setup. We just had earnings and we beat. And we saw no volatility on earnings. And we're heading into this V2 moment. We're looking for a straight line now out of the range. You could take this a step further with the macro indicators on AMC. We're looking at a monthly chart, so I'm showing that perspective with the macro support here. You could see the upside break that we had in May, and then all of June, and then all of July has just been very, very small range, very low volume, consolidating into that next breaking point. We just had a new monthly candle come in. Makes no sense to go sideways again this week. We're looking for a vertical line break, either up or down now. Obviously, we're looking for the upside break. And with that, we have the monthly indicators on AMC. The MACD has flipped to the upside for the first time since January 2021. And the RSI on the monthly is about to cross the RSI moving average for the first time since 2021. If you go back to August 2023, a year ago, when we were looking for the break here, the MACD was bearish still, and the RSI was not as low as it is now. We have the exact same. What I'm saying is we have the exact same setup that we had in August 2023 when we broke to the downside. The sign the papers earned, that moment of we're heading into that breaking point. Obviously, we broke to the downside. We're at that moment again, and the market is positioned in a way where it's about to melt up, and all of the macro indicators, the monthly indicators on AMC have flipped bullish. The MACD is bullish. RSI is still oversold on the monthly. We're about to see the cross. We're sitting at all-time high levels right now for AMC. OBV is at all-time highs. Look at GameStop, same story. Almost hit all-time highs on this move here. Pulling back for the retracement and consolidation. MACD flipped to the upside on GME for the first time since 2021. And the RSI crossed the RSI moving average for the first time since 2021 as well. Bullish, nothing else to say. And if you really break this down to I already showed all the different perspectives, how we're pinching down tighter and tighter range into that breakout. As far as tracking goes, we're at that breaking point again. We're looking for a vertical line up or down. Obviously, we're looking for the vertical line up. Look at the EMAs and Bollinger Bands on AMC. Now, if you haven't watched my videos for the past couple months, I've been saying we have time. I've been saying we have time. This is going to take a month at least for this consolidation to play out. And while it's playing out, our range of support resistance is going to be the 100 EMA and the 50. And look at the price action. Look at all these wicks rejecting the 100, down to the 50, bounces off, right back up to the 100. Look at all these wicks rejecting the 100. Look at the bodies of these candles and look at the wicks. Trying to break over the 100, rejects it again, down to the 50, bounces off the 50 again, up to the 100, retests it, fails, breaks through again, down to the 50, up to the 100. We went flat, just sitting on the 100 EMA for a week straight. And then on earnings day on Friday, we broke below the 100 and bounced right off the 50 again. So the 50 and 100 EMA is our support resistance range until we get the breakout, and it's going to be a vertical line breakout, either up or down. Again, we're looking for the upside break. The 50 and 100 EMA is sitting in a 21-cent range right now. 4.92 on the 50 EMA, 5.13 on the 100 EMA. 21-cent range in between the 50 and 100 EMA. That's, again, our support resistance range. And the Bollinger Bands are sitting in a 70-cent range. Look at how much this is coiling down. We're looking for a breakout now. We're at that moment of sign the papers earn, August 2023 again. Now, a year later, in August 2024, we're at that exact moment in time again, looking for another break, only this time we're looking for the break to the upside. If we do break to the upside, and when we break to the upside, we break over $13, we break over the 200 EMA, and that'll be for the first time since January 2021, taking us into our squeeze. Take it back to the tracking. Micro tracking's done. We're ready for a breakout. And then back to the flat portion, we have the exact same setup we had almost pretty much a year ago on the dot. The exact same setup. Exact same setup, looking for another breakout, only now we're looking for the break to the upside. Flat portion, almost a year. Perfect tracking here. Look at GME. Look at GME flat portion. This is a year plus on both sides here of tracking. Perfect. Looking for the upside break into the squeeze now for GME. And then all the way back to everything I said at the beginning of the video, the market in general, IWM, SPY, NASDAQ, and Dow Jones, and the crypto market is ready to melt up. It's a carbon copy of what we saw in the market leading into January 2021. So that is a lot of information, and that's going to be it for today. Like I said, I'm going to be making this video available to all of my subscribers just this one time. If you decide to become a member of my channel, great. If you don't, I'm going to more than likely be going live this upcoming week because I think we're going to be breaking out, and you'll be able to at least watch the live stream. But I cover, I've heard people say, oh, he's back or Ant's back. I never went anywhere. I've been making videos every single day, and I've been tracking all of this every single day, and not just AMC, not just GameStop, but SPY, IWM, crypto market, everything. It's a carbon copy of heading into 2021 is what we're heading into right now. Look at SPY, this climb here heading into look at SPY right now. It's a carbon copy heading into 2021. Symmetrically, IWM is about to go to all-time highs. We're at the last landmark before it breaks to the upside. Macro-wise, we're about to go to all-time highs right into this window where AMC and GameStop squeezed. SPY is about to break the midpoint. Last time we saw that, heading right into January 2021. Bitcoin is about to break two new all-time highs. Last time we saw that, heading right into January 2021. Dogecoin, same exact story. And GME, same exact setup, heading right into 2021. AMC, same exact setup, heading right into 2021. We have the exact same setup that we saw August 2023 when we broke to the downside. Now, a year later in August 2024, looking for another breakout, except now we're looking for the break to the upside, into the squeeze. And that's back to the market positioning and everything. You kind of get the point. I would hope you get the point. Nothing changed. From the beginning, my very first video to now, nothing has changed. AMC and GameStop are squeezing. And the rest of the market is going to continue climbing. I know mainstream media is pushing this narrative again for the 1,000,000th time that the market's crashing now. Warren Buffett's hinting at a sell signal, this and that. Michael Burry went short on SPY or SPX at $430. SPX is coming off all-time high, like 5,600. Macro indicators, very bullish. Very, very bullish. Not to mention Not to mention, if you're short on AMC, right? Just think about this from the perspective of somebody who's short on AMC, and the whole short thesis was always the debt. It was always AMC's debt. Recently, AMC has restructured its debt in a way where they're now not having to pay it all for the next 5 years. Not to mention, since COVID, we have quarter over quarter, year over year growth. So we're bringing in more and more money. We've restructured our debt 5 years out now. We're already sitting at lows. We're already undervalued as it is. And all of the indicators and all of the tracking and the current state of the market, the position of the market is bullish. This is the opposite of what you want to see if you're short on AMC or GME. It's the opposite of what a short seller wants to see right now. The complete polar opposite. Very, very bullish moving forward. I mentioned this range is really, really tightening down now. You kind of see the Bollinger Bands are actually, looks like they're opening up a little bit, which that's what you want to see. I mean, the last time we saw that right here when we got the break to the upside. So you see it tightening down, then it opens up. It looks like they're kind of peeling off each other here, opening up a little bit. This is ready to break out. And just as far as, the tracking itself, we're ready to break out. We checked off all the landmarks on the micro, and we're pinching down. Like I said, if we somehow do not break out this week, we're talking, this is going to be the price action this week. Talking a 20-cent range up and down. All the way to Friday, we're sitting right here. I mean, you're really pushing it at that point. I have to bet we're going to be seeing the breakout this week. Doesn't mean we have to, but, the last earnings, we saw the breakout the following week. Same exact setup. That's it for this video. I hope you guys enjoyed it. For all the people that don't watch my videos daily, that aren't members of my channel, hopefully this opens up your eyes a little bit to what's going on in the market. We are squeezing. Nothing has changed. Nothing has changed from the beginning when I made my channel to now. That's it. It looks amazing. Genuinely. Everything looks amazing. So with that being said, that's going to be it for the video today. Probably will catch you guys this week with some lives because I do think we're going to be breaking out again. We do not have to break out this week, but it looks very good for breaking out this week. So we'll see what happens, and I'll catch you guys in the next one.